Going to open the market this morning. I see green pretty much across the board. Nice gain for the Dow, up about 150. David Nicholas joins us. The debt in the news, David. Senator Schumer will hold a vote, but it's likely to fail. So are we in danger of a debt downgrade like we saw in 2011?
Stuart, I'm very bullish on America's future, but I have very real concerns in the short term. I am fully convinced that the U.S. is heading for another debt downgrade. What we saw in 2011, that downgrade was based on two factors. And the first one was, what was the trajectory of U.S. debt? So the analysts at the time believed that by 2021, the U.S. debt to GDP ratio would be 80% debt to GDP. Where are we at today, Stuart? We're over 100% debt to GDP. So we're far beyond that metric. The other metric that they looked at was, what's the political stability? And by any measure, Stuart, we are more polarized today than we've been in a very long time.
Okay.
So that is what has me concerned. And if we get the debt downgrade, which I think is coming, it really will spell trouble for markets.
Yeah, that's what I was going to ask. I mean, if we do get the debt downgrade, what happens to the bond market? I take it, do prices fall or go up? Do yields go up or down? What happens to the stock market? Big sell-off? What do you think?
Well, Stuart, the market's already telling us. If you look at the 5-year credit default, which shows us the risk for default, the U.S. is trading 10th. We are behind 9 other European nations that have worse debt ratings than the U.S. So the bond market is already telling us something's wrong. I think yields surge. I've already said, and I don't want to be alarmist, but I've already said the 10-year will be above 2% by the end of the year. If we get a debt downgrade, Stuart, those numbers are blown past 2%. It spends real trouble for the market. So we're telling our clients right now, unless Speaker Nancy Pelosi is going to write you a check for the money that you lose in your retirement accounts, you need to take action. Give yourself some protection now in the event things don't go well out of a chaotic Washington.
So are you saying sell now to avoid the debt downgrade consequences?
Well, it's hard to say just sell without knowing exactly what will happen, but you want to have hedges, meaning raise a little bit of cash, Stuart, because if things go the way that I think they're going, we could have a much better buying opportunity. I am not a fan of selling altogether, but raise some cash, get some hedges. You can buy puts in a portfolio. You can buy defensive type positions, but have some cash ready, because I think a great buying opportunity could be right around the corner.
Okay, so as of today, you're not doing any dip buying in big tech?
Not yet, Stuart. We're adding hedges. So actually, we want to profit for some profit taking in tech, but we're going to be ready to buy tech. But today's not that day.
Not the day today. All right, David, thanks for joining us. We appreciate it.